Friends, there is a cleanup drive in GST, as we all know, and even under Income Tax Section 142 for an inquiry before assessment, an amendment has been enacted White Finance Act 2023, wherein stock taking of inventory can happen physically at your premises. Many a times, due to certain mistakes in the stock taking of the inventory, raw material, work in progress as well as finished goods, due to these mistakes, the taxpayers have to face the wrath of the GST or Income Tax Department. Mind that when the department does stock taking of inventory, in case a shortage is found or in case an excess of stock is found vis-a-vis the books, in both these cases it would lead to a demand from the GST or Income Tax Department. Hence, in this video, we would discuss certain do's and don'ts of stock taking, so that the GST or Income Tax Department, as and when and if they visit the additional or principal or other places of business, then the books and the physical inventory are appropriately shown and reconciled. We will discuss 6 do's and don'ts to start with, and a very critical mistake which many taxpayers do is that they stock their inventory sometimes at a place which is not added as an additional or principal place of business. It may be a small ground near your additional or principal places of business, but this is irregular as per GST and as per income tax, and this excess stock which is stored elsewhere, this could lead to a demand. Therefore, do not stock your material at any place, especially for the contractors. Sometimes they stock the material at the site offices of the clients. In case these stock are found in their books and not in their clients' books, or if these site offices are not added as additional places of business in their GST registration, then it could lead to a adverse action against them. So this is very important for all the taxpayers to note. In case your stock of inventory is stored somewhere, then make it a point to add it in your additional or principal places of business. For manufacturers, especially the small manufacturers, it is seen many times that inventory is maintained of the stock of raw material and finished goods, but the records of work in progress is not maintained. Friends, it is mandatory as per GST, income tax and even as per accounting principles to maintain a stock of work in progress batch wise. Hence, it is important to note for the manufacturers, and they should get their work in progress also in the records and adequately valued and recorded. For downstream products like scrap, etc., many a times it is seen that since they are collected from various places, from various vendors, they are even loaded onto the vehicles for onward supply from various places which are not the additional or principal places of business. This is irregular as per GST norms, and in case these vehicles are intercepted in between without a regular invoice or delivery challan or any other document or e-way bill, then it could lead to a demand under GST. Mind that every demand under GST the profit element, the gross profit element would be demanded consequentially in income tax also. The decision of the Income Tax Appellate Tribunal of Kolkata in the case of Shiv Bidi manufacturers, that makes it very clear. There are other obscene number of decisions of courts in this regard. Now, e-way bills. Many a times it is seen that the e-way bill part B also is generated along with the e-invoice. This would lead to expiry of the e-way bill soon. We all know that there is a time limit for expiry of the e-way bills. Also, it would lead to a artificial difference in the stock. Therefore, at least part B of the e-way bill should not be generated before the vehicle is up and fit for movement and ready for movement. Next, many a times it is seen that in the warehouses, the stocking of the inventory, especially finished goods, is done in lots depending upon the usage for sale. For example, if you are a garments warehouse, then you might have 50 pieces of the same pair of trousers stocked for wholesale sale and 50 pieces of the same stock of the same pair of trousers stored elsewhere in lots for e-commerce sale. When the department would do a physical stock taking, then they would find an excess in one lot and a deficiency of stock in another lot. In this case, it would lead to a demand in both cases. Therefore, it is advised that your ERP stock or the book stock is also maintained as per lots as they are stored in the warehouse. I know practically it would lead to challenges, but certain processes need to be put in place so that if you do not want to stock it in your ERP in lots, then at least these lots should be side by side so that they are counted together. Again, sometimes for small taxpayers, it is seen that when they get a order from the customer, many a times on WhatsApp or on call, they note it down in slips of paper which are not serial numbered. Many a times these orders are not crystallized finally and invoices are not generated. Now, on these order slips, even the fact that the order was cancelled, that is not documented. This could lead to incriminating material for the GST department or the income tax department under section 142 to allege a suppressed stock or turnover, and it could lead to a demand both in GST and income tax. Therefore, if at all this process of sales order has to be maintained physically, it is important that the sales order book should be so named and serial numbered. In case the order does not fructify, then the fact of cancellation of the order has to be documented on the order book itself. So, these are some of the mistakes, some of the do's and don'ts in stocking of inventory of raw material, work in progress as well as finished goods. Taxpayers are advised to take note. There can be certain other errors also, but it is important that on a day-on-day basis the book stock should match with the physical stock, so that there are no unnecessary demands both in GST and consequential demands in income tax in this regard. Thank you very much for hearing out this video, and do like, share and subscribe to this channel for maximum dissemination of knowledge. Stay tuned. Thank you.